How you doing? Uh, Today is Thursday, February the 13th, 2025. Just doing a live here. I'm going to be talking about real estate notes and seller financing. I'm going to do this each Thursday at 8 p.m. Hopefully, if you can make it on Thursday, great. If not, hopefully maybe during the weekend, you can watch this. Won't be here too long. Going to break this down into, somewhere between 15 minutes to 30 minutes sessions. Just going through real estate notes, seller financing, how you can benefit with real estate notes if you are somebody that owns a property, whether it be your primary residence, if you own any rental property. If you're somebody that is looking to purchase a property, you can do that by, creating a note or someone, a seller offering you seller financing. This is for everybody. If you're a realtor out there that may see this, maybe you have clients that want a certain amount of money for their property, and before you maybe lower the price or maybe lose a listing. Maybe you can bring this up to them as an option and see if it fits what it is that what they're trying to accomplish as the seller of the property. So each Thursday, 8 p.m. Eastern Standard Time, we'll, tackle real estate notes in some form or fashion. And then if anybody watches this, you have any questions, please post the questions and we'll get those answered. If you need to reach out to me, my contact information, 973-475-8488, or you can email me at investorgmr@yahoo.com. You can send an email there. And if you have any questions or if you want to set up a time to talk, we can do that as well. So I'm just going to share my screen here. There's a little presentation that I want to go through a little bit. So, real estate note investing, that's what we're going to talk about. We'll get into the seller financing part, probably in a couple of weeks. But we just want to give you a good foundation on what real estate note investing is or what real estate notes are. Again, you'll see my contact number here with my social media and things like that on there. And you can always reach out to me. That website on there is not correct. I need to correct that. But my email is investorgmr@yahoo.com. Um, so you can reach out on IG at Abundant Capital Group. And then I'm also on YouTube. This video will be posted to YouTube. If you need to have a place to that you can see a bunch of videos, there are other videos on there as well that talk about this, but this will be the most recent one that'll go up. So if you want to go there, please subscribe to that channel. Each week when we go live, we'll post it there. Um, So a little bit about me for people that may be watching this for the first time and haven't met me. Um, I was a licensed real estate agent for over 20 years. Don't have my license active right now, but have been around buyers, sellers in terms of being a realtor for an extremely long time. I've worked with some banks, as you can see here. Did REO and short sales for some of these larger banks earlier on in my career. Also did some real estate development. I worked as a construction supervisor for about 3 years on a couple of projects, in the Essex County area. So have some knowledge about that. Also, I was in the property and insurance for some time. Had my license at one time. Have since, I'm not licensed anymore with insurance, but understand the insurance, property and casualty side as well. And, my main goal here is to help self-employed, some professionals and individuals invest their capital to obtain above average rates of return on their money. Also trying to help real estate professionals um, that may have sellers in different situations on properties where understanding how to create notes and what real estate notes are can help your clients solve their problem. Maybe they don't have to take as much as a discount on or lower the price on a listing if you understand the real estate note side of things. And it's not going to work for every seller. If you're a realtor or somebody like that, or even an investor, it's not going to work for everybody, but it will work for a good amount of people once they understand what real estate notes and seller financing is. So that's what I'm going to go through. I'm going to go through what is a real estate note, why invest in notes and create seller financing. And like I said, we're going to kind of break this up. We're not going to go through all of these topics that we have right here. But we'll just start off with a basic foundation on what is a note and what is seller financing. And then week by week, we'll kind of tackle some of these things, and then we'll start to look at, different opportunities that are in the market as well. So again, just want to give you a good foundation on what this is to give you a basic understanding of it. And then, obviously, if you have questions, we can try to cover those as we move forward. So what is a real estate note? It's a promissory note that provides the financial details of the loan's repayment, such as the interest rate and method of payment. Um, so basically, you are becoming the bank on the property. You, as a seller, are financing a buyer. And for the buyer, you're someone that, maybe you cannot get qualified at a bank, especially right now in this climate that we're in. A lot of the mortgage availability is pretty low. It's probably the lowest that it's been in the last like 15 years or since the GFC. So you may be someone that's self-employed, has a couple of different ways of making money, maybe had some issues on your credit, some things in the past, coming out of COVID that were there, and you're not able to get yourself a loan um, at a traditional bank or financial institution. You can look for these situations where the seller will finance you. And the seller, again, you can become the bank on these, and you'll start to see the benefits of becoming the bank on a particular property, based on your situation. Um, a real estate note from a seller's perspective is not for someone who has to take all of their equity at the time that they sell a property to go, like that money has been allocated to go and do something, whether that be another investment, whether it's to, go on a great vacation or pay for a wedding or pay for a kid's college tuition. If have a certain amount of equity, whether it be 25,000, 125,000, 300,000, whatever it is, and you have to take the proceeds from that to go and do something else right away. Real estate notes and creating a real estate note on a property is not something for you. But a lot of times, people who are selling a property don't necessarily need all of $100,000, $150,000 to then go and do something right away with that money. So a lot of times they're going to take that money and put it somewhere. Hopefully they're putting it in something that is going to gain interest, but a lot of times they don't have a specific um, need to put that money into something right away. Maybe out of $100,000, they may need $25,000 to pay off some credit cards or to, like I said, go on a vacation or whatever it is. Maybe there's a certain portion of that, but the entire amount is not necessarily allocated to go somewhere. So you would want to consider or look at this particular option of creating a note on a particular property if that is your case. But again, if you are someone that has to take this money and say, I need all of it to, pay off these things that I have, so I'm completely out of debt or whatever the case may be, this wouldn't work for you. So when it comes to notes, there are pretty much two categories. You have performing and non-performing. A performing note is where someone is paying on the note um, on time each and every month, whether it be the first of the month, the 15th of the month, whatever the case may be. They're making that payment. So that's considered a performing note. Also, you have what's called reperforming. Maybe someone, like I said, where we'll use the example of COVID, somebody coming out of COVID, maybe they had some issues at that particular time, and now, their employment's back on track, and whatever issues they had at that particular time have been solved, and now they have been showing a consistency to pay. That's considered a reperforming note. So they had a little trouble, but they got back on track and, have been making payments steady. How long that has been is really case by case situation. It could be they've been paying consistently now for 3 months after, maybe having some trouble over the last 6 months. It could be that they've been paying now for 3 years consistently after, having an issue about 3.5, 4 years ago. So then you have non-performing, and that means that the person is not paying at all. They stopped paying for whatever reason, and it's been longer than 90 days. So they have some type of issue where it's causing them not to pay, and that's a type of note that can be purchased as well. Um, and you have subperforming notes, meaning that someone may pay 6 months straight, maybe miss a month, um, make a double payment, uh, in month eight, pay again on the ninth, 10th month, 11th month, maybe on the 12th month, miss a payment and then make it up. So they're kind of um, uneasy or unsteady payers. They may miss a month, but they do make them up. We kind of call that subperforming. So you may collect all 12 payments within a given year, but like I said, they may miss one or two here and then make up the payment. So we kind of consider that subperforming. And now, what is seller financing? Seller financing is when the owner of a property becomes the lender on the property that they are selling. So I kind of touched on that a little bit um, earlier. So you can do that. And whether your property is free and clear, meaning that the mortgage is paid off, or you still have a mortgage on a property, you're still able to offer seller financing to a buyer. Um, some some people, and this is again, oh, sorry. When we talk about when it comes to realtors and things like that, let's say you have a client, you're listing the property, you get it under contract, you're going through the process, and then down the road, the buyer can't qualify. So if you kind of spend some time, taking the property maybe off the market, thinking that you've got it sold to this particular person, and then something happens. Well, in this instance, a lot of times seller financing can step in, and then you can create the seller financing for that particular person, depending on what that issue was on why their financing fell through. But maybe that person can still purchase that house if that seller is willing to extend seller financing to them. And then what happens is, um, you can do that. The person will then, you become the bank on the property, and then you can move forward with the sale. We'll kind of go into detail a little bit later on, how that works, but you have the ability to do that as opposed to maybe trying to find a whole new buyer, starting this process all over again. Maybe it was something not too major, not of a big concern, but for a bank, it caused them to say, hey, we can't qualify this person. Or, it could be just like an interest rate thing. Over the last, couple of days of this video coming out, you've seen, interest rates spike over 7% and then kind of come back down closer to 7% today. And sometimes that fluctuation in that interest rate could really knock someone's debt to income ratio off, and now a bank doesn't want to move forward with that particular purchase that the person was looking for because now the rate is different than what it was maybe 2 weeks ago or a month ago. And so you're starting to, probably see that more and more, going forward now because of the just the environment that we're in. So, it's when the seller or the owner of the property can, become the lender on the property. And so, um, I'm going to stop right there, just to kind of give the basics of things. Again, I want to kind of break this down, piece by piece, in small, um, bite sizes that people can understand. So it's just the idea of being able to have a property where there's either a mortgage on it, or if it's free and clear, where you can become the bank. And there's a lot of reasons why somebody would want to do that. Maybe I'll cover that next Thursday, and give you some of the reasons why somebody want to do that. But again, and what I want to really just emphasize for this first time is that, if you're someone that is selling a property, and based on the equity, however, whatever that amount is, if you do not need that money right now, all of that money right now, to then go ahead and do something, to satisfy a debt, or to, um, you know, that money is earmarked for something specific, the whole amount, you would want to consider selling your property with seller financing, or creating a note on it. If you're someone that is not, that cannot get qualified by a bank, you would want to, you know, consider looking for these particular opportunities. Going to people and say, hey, look, I am a buyer, I have X amount of dollars that I can put down on a property. If you can, extend financing to me, I can buy this particular property. And then, we can then come in and help things get structured properly for the person that's selling the house, and for you as the buyer. So it can work for both people. As we talked about earlier, realtors, before possibly dropping um, a price on a property, because this person, this seller is adamant about, getting $400,000 for their house. Before you drop it down to 390 or 385, you want to possibly talk to them about considering doing this. And we can show them again how it works, how it will benefit them, what they can expect to get from this total transaction, if they, choose this route. So it's for, anyone, that has a property that is in real estate and looking to do something for an investor as well, especially for an investor. A lot of times, investors who have rental properties don't want to necessarily do everything that a landlord wants to do for a property, be responsible, for the property, for the maintenance, the upkeep of the property, for the responsibility of the property, dealing with tenants, dealing with repairs and things of that nature. Maybe they've gotten to a point where they just don't want to do that. But that cash flow that you receive, helps you to live the life that you want to live. So maybe, you want to continue to get that cash flow. You can do that without all of those other responsibilities and things that you have to do on a rental property. This is a way that you can increase cash flow a lot of times as a rental investor, because you do not, have to worry about any expenses. Your expenses um, are minimal. There's, a servicing fee is your only real expense when you create a note on a rental piece of property. So, again, it's something that you at least want to look at, depending on your situation, what your goals are, and what you want to do. It doesn't hurt just to look at, what does this thing look like if I did offer seller financing. So again, we're right at about like 20 minutes. I want to keep these kind of short because I know people, um, don't want to, look at videos that are 45 minutes, a lot of times an hour long. So we want to keep these bite sized for you. And hopefully, this is just a start of what this is, and to get your mind kind of wrapped around the idea. And then next week we'll, go a little further. If anybody has any questions, you can post them to the video wherever you may see it. Again, you have my contact information, investorgmr@yahoo.com, or you can text me or reach out to me and with any questions, and we'll, cover those questions first next week before we get into more of the details. So, just again, just something to consider as an investment. Again, you have the ability to buy these notes once they are created, and we'll explain, as we move forward, the types of returns and different things that you could do. But for right now, we just want to try to introduce the concept, and hopefully that makes sense. So, if any questions or if anything was confusing, I didn't explain good, please let me know. I want to try to make this, have as much value as possible. All right, everybody have a good night, and we'll talk to you soon.